The United States did something it hasn't done since 1998. It spent money to prop up another country's currency, Japan's yen. And the official reason sounds simple enough. Japan is an ally, the yen was falling apart, so Washington stepped in to help.
Here's a quick look at the yen as Japan and the US warned of further coordinated action in FX markets. That's after confirming their first joint intervention in 15 years to lift the Japanese currency from a near 4-decade low. President Trump, for his part, earlier said the joint intervention was a signal of Washington's friendship with Tokyo.
We have a good relationship with Japan. We're very strong, very, very strong financially. They have a weakening yen, and they wanted a little bit of help, and we're always there for Japan. Japan's been very good to us, with the exception, of course, of Pearl Harbor.
But that's not the real reason. The real reason is that the United States wasn't rescuing Japan. It was rescuing itself. And a week later, the market already looks like it's calling the bluff. So in this video, I want to show you what happened, why the US truly did it, and what it could mean for the dollar, for interest rates, and for our investments. So with that said, let's get into it. Hey, my name is Graham Mercer. You're here for the finance, and today we're going to talk about why the US is buying yen. Hope you're having a good one. If you saw the last video on the yen, this is the next chapter, and there's plenty that's new. If you didn't, don't worry. You'll be caught up in about 60 seconds. So here's what happened. On July 31st, the US and Japan did something called a joint currency intervention. That's a fancy way of saying both governments went into the market and bought yen on purpose to push its price up. Now, the reason that's a big deal is the last time they teamed up to do this was in 1998, almost 30 years ago. Governments don't do this often because it's a little like admitting a patient needs emergency surgery. And it worked at first. The yen had fallen to a roughly 40-year low, around 163 to the dollar. After the intervention, it snapped back to about 155 to the dollar. Stronger yen, quick win, right? Except look what happened next. Within a week, the yen gave back about half of that. It slid back past 159. So the emergency surgery half wore off before the patient even left the room. Not an ideal situation to be in. So that's the what. Now here's the question that matters. Why would the United States spend its own firepower to lift someone else's currency? And that's where things get interesting. See, Japan isn't only an ally. Japan is America's banker. For decades, Japan has been one of the biggest lenders to the US government, holding over $1 trillion in US treasuries. Think of a treasury as an IOU. The US borrows money, and Japan is one of the biggest people holding those IOUs. Now, why does that matter here? It matters because of something called the carry trade. For years, money was almost free to borrow in Japan, and it paid more to sit in the US. So investors borrowed cheap yen and parked it in US assets. That flow helped fund America's debt and helped hold US interest rates down. But when the yen swings hard, that trade breaks. If the yen suddenly strengthens, all that borrowed money has to rush back home, and Japan may get forced into selling US treasuries to defend itself. And here's the part you really want to pay attention to. When America's biggest banker starts selling US debt, US borrowing costs go up. For everyone. That's our mortgage rates, our car loans, and the interest the government pays on its own giant pile of debt. So follow the logic. A messy yen forces Japan to sell treasuries. Selling treasuries pushes up US interest rates, and that's the one thing the US cannot afford right now. So when Besant stepped in to save the yen, economists who watch this closely say his real target was never Tokyo. It was protecting America's own ability to borrow money cheaply. The yen rescue is a treasury rescue in disguise. Okay, so here's where it gets tricky. Besant came out with a whatever it takes message. Strong words. The market has heard that phrase before, and normally it works because a promise can move a market without spending a dime. Sometimes it's not the money you spend, it's whether traders believe you'll spend it, but this time, analysts are pointing at a problem. The firepower is limited. Japan went into this with around $1.29 trillion in reserves, which sounds enormous. until you remember the currency market trades more than that in a single day, and the yen already gave back half its gains within a week. So traders are poking the bear, testing whether Washington and Tokyo will keep buying. One economist even predicted that the yen could resume its decline. So how do you defend a currency when you don't have unlimited money to do it? You don't do it with cash. You do it with policy. And that's the move Besant made next. See, there's another lever. Japan's central bank, the Bank of Japan, can raise its own interest rates. Higher Japanese rates make the yen more attractive to hold, which strengthens it, without the US having to spend a thing. And right after the intervention, Besant went on TV and said the quiet part out loud. Intervention alone isn't enough. Japan needs to follow up with rate hikes. Reuters reported his comments have all but locked a Bank of Japan rate hike in September. And you can see the machine moving. The Bank of Japan has now lined up back-to-back board member speeches right before their big meeting. When a central bank suddenly schedules a run of speeches from its more hawkish members, that usually suggests they are warming up the market for a move. But here's the uncomfortable wrinkle. This is the US Treasury publicly leaning on another country's central bank to change its interest rates, and that's raised real questions about central bank independence, because a central bank is supposed to answer to its own economy, not to Washington, so even the fix comes at a cost. So what does any of this have to do with you? Because of what a forced yen reversal could do. If the Bank of Japan hikes and the yen strengthens fast, that carry trade I mentioned earlier could unwind. And when it unwinds, it doesn't stay in Japan. Money sells US assets to rush home. We got a small taste of this before, where a yen spike rattled stock markets around the world in a single stretch. Analysts are warning the same pressure points are here again: treasuries, tech stocks, and global markets. So a story that sounds like it's about a foreign currency is actually about something much closer to home. What your dollars can buy, what your investments are worth, and how much your paycheck really gets you. Now, I'm not going to sit here and tell you which way this breaks, because nobody knows. But there are two clear paths. Scenario 1, the plan works. The Bank of Japan hikes in September, the yen stabilizes in an orderly way, Japan stops having to sell treasuries, US borrowing costs stay calm, and this quietly fades from the headlines. Crisis managed. Scenario 2, the bluff breaks. The yen keeps sliding despite the tough talk, or the hike comes and the carry trade unwinds too fast, and the pressure lands right back on US treasuries and global markets, which is the exact thing this whole operation was trying to prevent. Same starting point, two different endings. And this is not financial advice, it's how I'm watching it. So here's what I'm paying attention to, and you can watch these too. 1. The US dollar against the yen. Is it holding stronger than 155 or drifting back towards 160? 2. The Bank of Japan's September meeting and those board speeches on the 27th and the 10th, do they hike? And 3. Long-end US Treasury yields if they start climbing. That's the kind of chain reaction this was supposed to prevent from spreading in the first place. Because in the end, the US didn't spend money since 1998 to save Japan out of kindness. It did it to protect its own ability to borrow. And whether that works or not isn't up to a press release. It's up to whether the market believes them. Right now, the market looks like it's still deciding. If this made the yen story make any sense, please do me a favor and hit like, subscribe if you're new, and I'll see you in the next one. Take care.